Welcome back to the Capital Mindset Show. We are your hosts, Austin and Fabio, and today we are revisiting our Alibaba video. We're going to be kind of answering some of our audience questions. You guys asked very excellent questions, and I'm going to be asking Fabio these questions today. And then we're going to kind of explore a little bit too capital restrictions, what those mean for businesses doing business inside of China, as well as what that means potentially for you as an investor. So without further ado, the first question is, could you elaborate on the difference between owning BABA and then BABAF? And then why do investors prefer the Hong Kong shares? I know Sven Carlin, I believe, correct me if I'm wrong, he likes the Hong Kong shares. And now, would you kind of go into detail with this a little bit more and just sort of explore if there even is a difference between these? And then also why some of the sentiment might exist here about people who might prefer to own, quote unquote, own the Hong Kong shares. First of all, actually, can you even own the Hong Kong shares? Let me ask that.
Yeah, you can own the Hong Kong shares.
Okay.
What do you mean by ownership, though?
Like ownership.
Oh,
like
no.
You are a shareholder. No?
Not in the end company, no. They're still part of the VIE structure. So that's what you meant by ownership. But you own something. You own shares in the Hong Kong entity.
Yes.
Just like if you own the United States, you'd own it in the United States entity. So and they all are connected up like a chain. So what you're basically, the main difference is simply you have eliminated the delisting risk of the United States, but it's not even a risk because the delisting risk of the United States is simply an inconvenience to you. Simply, you don't have to make the switch to the Hong Kong shares if you so choose. You'd already be in the Hong Kong shares. Of course, a delisting in the United States would presumably lock out a bunch of capital, so you would have capital loss, unrealized capital loss, because a lot of different entities would have to more than likely sell. And that would mechanically, like I always like to say, mechanically drive the stock prices down. But no, the only difference for those two shares is simply the removal of the convenience or inconvenience of delisting, which I don't think is an actual risk.
Yeah, and we've kind of explored why we don't think that's an actual risk before, because the inherent structure of the VIE, why would they delist? Why would they want to delist? Yeah,
so beneficial.
It's an incredibly beneficial and great way to raise capital without really giving anything in return. So why would you even want to delist?
Well, let's okay, wait, we got to be very careful how we say it because people are going to get confused. Delisting for the United States. So why would the United States not delist? Well, that's a complicated question. And that more aligns with those who have the means to do it, have no incentive to do so. That's it. So the reasons why China has every incentive not to disallow the VIE. Okay. Now, United States, those who have the means to delist the companies for various reasons don't have the willpower. Let's just leave it at that. Willpower to delist them.
Interesting. Okay, so now this kind of goes to the second question that I have, and it's one of our audience members who commented on a couple of recent investments he's made in Chinese enterprises. And then he also asked if you could elaborate a little bit more, and I'll kind of lead you with these as well, as to why individuals like Sven Carlin and Charlie Munger, and originally before he sold Monish Pabrai, why they all like to invest in these Chinese companies itself. Because I've seen a lot of people sort of have this, like you've always said, sort of have this theory that, oh, if the big guys are doing it, then that might prove fruitful for me as well as an individual investor. However, let's kind of explore why that might be flawed, like why you shouldn't exactly chase others' investment decisions, if that kind of makes sense. And then also too, why, because I think you've told me before that you've actually, not like in person, but you've asked him over his own comment section. You've asked Sven Carlin before why he continues to invest in these companies. So I kind of want to explore that, to explore maybe what he's said regarding that as well.
Yeah, so I actually like Sven Carlin as a creator. I think he provides a tremendous amount of value. Like however, just like and people can be good at something, but they can be wrong too. So when I asked him about his opinions or as to some of these risks, his response was simply that the The Chinese government's probably not going to make it illegal, which I already agreed to. I don't think that that's the case. And that the United States was not going to delist it. And that if they did, you could just own the Hong Kong shares, which is his response. He made a whole video about that. So he never answered as to why or what's the issue with the VIE and not owning anything. And he believes that he's going to trust the CCP in honoring, not honoring agreements, because actually it's the Chinese courts have already ruled that you don't own anything. So it's not even that. I mean, I can actually cite those later on if you have another question specifically on that, but keeping it in terms of the super investors, or like, you know, talking about Monish Pabrai, who he sold Alibaba and he prefers Tencent over Alibaba. He just sold Alibaba. I think that, you see, like operating under Monish Pabrai's logic, he did something illogical. Okay, so his problem is not with the structure. When I did a little more digging, his problem is actually not at all anything to do with the VIEs not owning anything, et cetera, the fundamentals of investing and recognizing those fundamentals. His problem is he believes Baba is an inferior business when compared to something like Tencent, which is more or less illogical, because you got to understand that Alibaba and Tencent as standalone businesses, they are phenomenal businesses. And the risk reward that you see with those investments is tremendously favorable when compared to the Western world. I mean, we have what we see here is two businesses that are fundamentally located in a country with a tremendous population and huge amounts of avenues for growth within domestic China and internationally. Now, why would Alibaba be warranted a sell and then just to add to your Tencent position when you have, you know, for now, a bunch of other positions in your portfolio that are seemingly of, you know, little bit less risk reward? Okay, so adding or answering that question is perhaps his strategy is different, and then that answers the question that you just proposed, why you shouldn't follow people. It's because their strategies, you don't know their strategies, you don't know their motivations, you don't know anything aside from their position sizing, and you cannot take what they say wholly, right? You have to always understand that they are in the business of asset allocation, and they are going to be doing their fiduciary responsibility to those that they have a fiduciary responsibility to, and Monish Pabrai will do it for those individuals. So those are who he's really going to look out for, and if he answers a question, he may hold back information, and he actually frequently does hold back information and refuses to answer some questions for good reason. He should. And with like the sell of Alibaba, he sells Alibaba at a time where it's, if nothing's wrong with the business, right, or nothing's wrong with the ownership structure, there actually would be no reason to sell Alibaba on a valuations perspective. So perhaps the strategy lies, or that's the word, the strategy is different, right? He's implementing a different strategy, and we got to be careful not to conclude that that is, you know, simply genius, or not understanding something is also genius in and of itself. That's also a fallacy. So if you don't understand why someone's doing something, you just say, oh, they're so intelligent that they're beyond my understanding, and therefore I don't understand what they did. So it makes sense. So that's another thing that you can delude yourself with. But he is a good investor, and
yes,
he doesn't want to own Alibaba anymore, presumably because he sees something better, but he's not owning it for the right reasons. You can be right, but for the wrong reasons. He's instead choosing to invest in another similarly structured entity as Tencent.
So now, actually speaking of fiduciary duty, and this kind of ushers in the next question, which is actually one of my favorite questions because it really got me thinking as well. And I'm actually going to like read this question out because it's a very packed question, and I think that it would be very beneficial to our audience to actually break this down. So basically, he is asking us exactly this. So for those of us who have portfolios that are managed by wealth management firms, and these firms have the fiduciary relationship with clients, if these firms are holding Chinese contracts, and these are not legally enforceable and are essentially valueless, and then are they in violation?
Pause there. Then we'll answer the rest of the question. They are legally enforceable, right? Okay, so what do you own when you own Baba? You own a Cayman Islands company. The Cayman Islands company is what you own. You own shares of that. Your rights stop there within the United States. That's where your rights end. Your rights end in the sense that Citigroup, I think, is the one that actually holds Alibaba ADRs, because that's how ADRs work. Citigroup is like the custodian for the shares. Citigroup must oblige your rights to ownership of Alibaba, the Cayman Islands company. Okay. Now, your connection to the actual enterprise is not enforced by the United States, or it's not enforceable. However, the fiduciary responsibility, right, is it's very gray, because even experts in the industry, financial experts in the industry, have still a hard time understanding the perception or the full understanding of Chinese investment instruments. Now, what does that mean? Well, that means they pretty much will get an easy pass if anything were to happen, because what they can say is, with the reasonable assumption, everything looked good as long as everything was followed or enforced, right? So on top of that, no capital return. Capital returns are not part of any agreement. You're not guaranteed any capital returns. That's the funny part, right? So I think there was a question, something about dividends, but
yeah, which
we'll get to.
Yeah.
Just sticking to this, dividends. Let's say you're not entitled to a dividend from these Chinese companies. You don't own a bond. It's not a debt, right? They can pay a dividend when they choose to pay a dividend to you. And if they're even allowed to pay a dividend to you, because they can always use the excuse that China doesn't allow them to pay you a dividend. And then there you go. You don't get any capital return. And then they won't buy back those shares, or maybe they do, but they issue more shares than they did. And none of that is breaking any contract. None of that is ergo, by extension, breaking the fiduciary by investing you in those companies. And they can simply say, these were attractive instruments at the time, based on what we believed in, based on credible information by the industry, and we believe that was the right thing for you. They did nothing wrong under their license, right? It's only if there was a knowing, right, and a reasonable person, right, within that industry with those credentials should have known that, right? And that's set by the whatever license they're operating under, sets those standards, right? So they're not going to be breaking those standards by investing your money into Chinese equities, because everything seems to be by the paper, okay, you have a contractual agreements with the end entity, and the presumption is that those contracts will be fulfilled, right? Your rights will be fulfilled. But if they're not, then that's not something that they broke on their fiduciary end, right? Just part of the course. They broke the agreement, not me. Let's say I'm your guy, Austin. I'm investing your money, and I invest you in Chinese equities. Did I do something wrong if they don't fulfill their obligation? No, that's not me. That's them, right?
Yeah.
I didn't embezzle your money. I didn't do anything. I put it into Chinese stocks, right? And you were already given the spiel of the risk that stocks are risky instruments, blah, 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 blah. So you were supposed to already be aware. And then maybe you could say, and the SEC is looking into this before you think that, if you're watching this video, the SEC should focus on those disclosures. They're already looking into that, right? And that's actually, I hope that they go through with it, and that they have to disclose this more.
Yeah, and this actually kind of ties to the second part of the question. He's basically summarizing, and he's basically asking that when you buy into a Chinese company, shouldn't there be sort of a flashing disclaimer that says, hey, in exchange for your money, you literally own nothing. You have literally, it says here, virtually no legal rights, and holding a contract does not entitle you to any form of control over the business. At least to me, the way that I would look at this is that there's already precedents that exist for this in terms of Yahoo, and then also the court cases inside of China.
Yeah, there's many more where they literally ruled that the VIE does not represent ownership, and you don't have any ownership rights, which also means, just take it for what it says. The courts ruled that you do not own anything, and you do not have any ownership rights. Therefore, there's no point. What investing is about owning stuff, right?
Yeah.
That's why I don't understand why it's difficult. I'm not going to get carried away here, but I don't understand why that basic rule is just forgotten just because it's Chinese stocks. It's not forgotten in any other country.
Price go up, Fabio.
No, it's not simply price go up. It's big population big opportunity growth, big potential, boom, you know,
Price go up.
yeah, I mean,
Yeah.
okay, but
I love it.
I'm flabbergasted. I don't know. So,
all right. With that being said, let's go to the next question now.
yeah,
Basically, he's asking about a dividend. So let's say that Baba declared a dividend, which I've seen some creators on YouTube saying that in order to get the investor base in the US to trust these Chinese companies more, Alibaba should pay a dividend.
no,
And
that
he's
wouldn't
basically
work.
asking, would a non-Chinese investor receive anything at all? So
Okay.
you just said no. Would you elaborate a little bit more on that for me as your audience here right now?
So you got to look at net capital returns. So if you're
Mhm.
being fooled by the pennies, right, and they're taking the whole bill, then you're just a fool in that sense, because obviously, look, they're going to make the VIEs. They're not going to make the VIEs unattractive. They're going to try to make them look juicy. They're going to want to entice you in. That's the rule of the game here. The rule of the game is they cannot let you know that what you're buying is nothing. They have to make it look or appear as though there is a reason to own it. So you can give them free capital in exchange that they give you, you know, a net negative capital return. And they will do a net negative capital return, because as of now, no Chinese equity has given a net positive return. And be very careful when I say that. You need to actually listen to the words I'm saying. Okay, I am saying net negative capital return. That doesn't mean stock price don't go up. Okay, people say, oh no, I have capital returns. My stock price is higher than when I bought it. Cool. That's not capital returns. That's mechanically the stock price has gone up because more people bought in than have sold. And over time, you know, it's gone up because people are ignoring the fundamental fact that you don't own anything. And if you think that that's priced in, that's not priced in. Oh my gosh, that is not priced in. It is not priced in that you don't own anything. If it was priced in, the price would be close to zero, around there, because not even a royalty agreement. Okay, there's royalty agreements that people say. I've been in a discussion before where someone said to me, well, but it's like a royalty agreement. I said, no, that's not a royalty. A royalty agreement is not like that at all. Royalty agreement has only one thing in common, and then that is it is a contract. No, a royalty agreement is also guarantees, a set of guarantees, right, by which
Legally
someone is
enforceable as well.
exact. Well,
Exactly.
no, remember, technically speaking, this is enforceable. Okay, that's why I corrected you where said in the question, no, it is enforceable, technically speaking. Now there's technical, right? Technical and legal, and then there's practical. Is it practically enforceable? No, and there's a lot of things that are not enforceable. For example, the profit sharing agreement, well, that only has anything to do if there's capital returns. What if I gave you no capital returns? What if I did no buybacks or dividends or net negative capital returns? In other words, I did a buyback, but it's a token buyback and I dilute you more than I'm buying back. Let's play this game, Austin. We can play this game. So you invest in my company and I'm not going to give you anything. We're making tons of profits. And you're like, hey, can I have a piece of the pie? And I say, nah, I'm going to do it later. And then you say, okay. And I say, hey man, do you want to buy some more shares? And you're like, yeah, I'll buy some more shares. You give me $100 grand. And I just keep doing building the business. I'm making all this money, right? And then you're like, hey, can I have some cash so I can go buy my groceries? And I say, no, man, I gotta reinvest in the business. I gotta reinvest in the business. And then you're like 80 years old. And you're like, hey man, can I have some cash? I don't know. Live my retirement. I say, no, I got to keep growing the business. We got to think about the future. And then you never see a penny, right? What was the value of your investment? It was zero to you, right? It was zero to you. You received net negative capital returns. You actually gave me more money as you went on. And what if I did this? What if we did this? So what if you gave me $1 million and then each time you gave me $1 million, I gave you 100K? We can play that game too.
Yeah.
That's a classic Latin American game from Venezuela. You know, we can play that game in the banks, right? So you give me $1 million, I'll give you 100K. And then I get a bunch of people to do that. And I just build my business off of 900K from each investor. And I only give the investors 100K. We can do that game too. So that game that's being played is in part a lot of the time because the legal structure of China actually enforces that because of the capital restrictions. Capital outflows in China are heavily restricted. You cannot simply take money out of China. You have to get approval from the state. Okay. Unlike the United States or in most countries, where capital outflow is less restrictive, in China, it is heavily restricted by individuals and by corporations. Even though it's their money, they've paid all the due taxes. In the United States, they might do that if you're not paying your taxes. But if you pay all your taxes, it's your money, okay? It's your cash. You want to move it, go move it, all right? But if you're in China, not the case, right? So that has a whole host of implications that we didn't cover in that video, which was, what does that mean for American companies investing in China? Well, that adds a whole host of complications, adds a whole host of nuance that you need to understand. So like, for example, Wynn Resorts, they do a lot of business in China. Well, I'll say this, it matters how they do business in China. Okay. So actually, before people say it, Activision Blizzard, a company we talked about here, they do a lot of business in China, right? But they don't do it in the way that's restrictive. So they do an agreement with Tencent, and Tencent pays them. Tencent pays them for the license, and then Tencent is the publisher within China for like Call of Duty, for example, and I think the Blizzard games, right? So Tencent handles the publishing of these video games, but pays Activision the rights to do so. So Activision is actually getting the cash. So I'll go to Wynn Resorts. Wynn Resorts does the business within China and has the casino and resort within China, and their ability to remove capital is solely dependent on the Chinese government allowing them to. And most don't do it, by the way, Austin. This is what's upsetting, is that most companies don't disclose the cash in China. There's a reason why they do that, by the way, and people don't ask questions. People really just are not interested in digging deeper.
People also don't think to ask questions about this as well.
Well, because there's a trust that the SEC is there to protect you. For some part is, but if you don't know, it's always like when you work in an industry, you start to realize that there's a lot of facades, right? In terms of like how something really works. And then the outside world thinks it's some, magic to something, and you're like, there's really no magic behind it. So
yeah, people think this guy's a genius when after all,
not really. But like,
no, yeah.
For example, the SEC, or not the SEC, so GAAP doesn't currently allow or reflect for the cash differences on the balance sheets of companies within China and the rest of the world. So because cash is supposed to be very liquid, but if you all of a sudden are dealing with capital restrictions, it's not so liquid anymore, is it?
No,
it almost needs its own line item, but it doesn't have one. And so when you're doing your analysis, it makes it very difficult. So why do you think Wynn discloses? They're being nice to their shareholders. They disclose the cash pile they have in China. There's a reason why they do that, and they don't disclose the cash piles they have in other countries, right?
Yeah.
Which I don't think there'd be a reason to, because I don't think they have any other casinos. But other countries, the rest of the world, is going to be about the same. It's cash is cash, right? It's maybe a different currency, but the restrictions are not what it is like in China. So they disclose, hey, we have this much cash in China, and there's a reason why they do that. Okay, they're not very overt about it, but they're for the investor that is concerned about that. For example, me, it makes my job a little bit easier, because I can then create some ratios to reflect how much of the business I'm going to discount and by how much. And they're always at the whim of renewing a license or renewing their brand, right? And I think they may have just done it, but like it involves a lot of interesting negotiations. Like when Steve Wynn donating about $100 million, or not 100, I'll just say in the millions, because I don't know the number off the top of my head, but he donated millions of dollars to the local university, and then magically got some sort of approval from the government. So you see how this game is played, and you start to notice, okay, so a lot of the power is contingent within the government's approval of things. So then it incentivizes a lot of corruption. And then, so how long can you assume that this corruption will be there to allow you to, bend the rules, to allow you to take capital out, et cetera, et cetera. So remember that it's interesting that people don't think about these things.
That is. So now,
are there any other questions? Maybe some people have raised points of concern, contention.
Yeah. So another thing, also kind of the same question about the dividends, is also in regards to the shares outstanding. Is that actually the correct number being reported on Yahoo? And then the second thing is, as well, we actually received a comment that was basically indicating that we did not exactly know what we were talking about because the VIE has been around forever, and that Alibaba has a lot of users in its user base, and the user base is going to grow. And my thoughts on that, or basically that's wonderful. That's wonderful if Alibaba's user base grows. However, I can't own it. Why do I
It was
care as an
very,
investor?
I remember that comment. It was very unfortunate that person deleted the comment. I wanted that
Yeah.
person to hopefully keep their comment on, because I wanted, if your comment is negative and I respond to it, and I like the negative comments. I want there to be discord. If you disagree, keep your comment. It's okay.
And tell us, yeah.
We're not going to delete
Let
our
us know.
video.
Yeah. Yeah. If you
If our video is wrong.
disagree, yeah, if you disagree with what we're saying,
Yeah,
tell us, let us know why, engage with us, because like that's kind of what we live for,
yeah.
like we love to kind of discuss
Look,
these
this
things.
YouTube can also serve. Maybe we meet, for example, a legal expert different from the legal experts I've consulted, and has a differing opinion, and I have something to learn. I want to learn. I want to know more. Maybe you're a Chinese legal expert, but that individual said we were incorrect. And I asked, I said, what are the points of contention? Because we stated a lot of things. We stated precedent, we stated laws, that exist within China, the legal structure of China. And then he came back with the arguments that I completely agree with. I agree that the VIE is not going to be eliminated by China. It's been working for 20 years. It's gonna, if it's up to them, they're going to keep it going for 100 years, because the points I stated, there is zero reason for the Chinese to make it illegal. That's why the officials within China have not really ruled or not ruled or moved against abolishing the VIE. They simply ruled in court, right, that those who tried to defend their rights as owners were simply denied and were then stated as not being owners. So therefore they have no rights. So that's what's occurred in China. There's not going to be a move by the Chinese government to stop the VIEs, because it allows them to raise capital at very low capital costs. That stuff that the United States stocks or companies cannot do. They can't do that, because in the United States, we have the respect of property law, and Chinese investors are allowed to buy, or if they're here, right? If they're here in the United States, they can buy American equities, and they can be owners of American stocks, American companies, and are have both fully vested rights over that company as an owner. Unless, of course, there can be different structures, like the Rocket Mortgage and has a VIE, but even
Which
in that
we've covered in
VIE,
other videos, yeah.
But that VIE is less complicated. Like, if you have a problem investing in Rocket Mortgage for the VIE structure,
Yeah.
and you don't have a problem with investing in a Chinese VIE, let me just say that is very interesting leap of logic, or that is a very interesting conclusion that individual has made, because the Chinese VIEs are severely more complicated than the Rocket Mortgage VIE. And the Rocket Mortgage VIE, for the most part, from what we saw in the reception of that video, was fairly complicated. When it wasn't actually, but it's fairly complicated. And there were many ways how within the domestic, country, there were ways that the management could kind of do some things that were maybe can be perceived by Class A shareholders to be, maybe they can perceive it to be unfair. That's how I'll say it. And somehow the same investor may or may not draw a different conclusion with a Chinese VIE stock. That they're perfectly fine. And again, that's the other thing, is my issue with the straw man argument, that we're just saying the numbers are wrong. So the numbers are right. We're not even assuming that the numbers are wrong. We're assuming the numbers are completely right. We're assuming, again, Alibaba is a fantastic business. I've said this many times, as a standalone business. That's why I agreed with that individual. I said to the individual, which unfortunately, again, no one can see because the comment was unfortunately removed. But the point about Alibaba being in a market with 1 billion users and going to go to 2 billion, sure, all that's correct. But why does it matter to you if you can't own it?
Exactly. Yeah,
You can't.
makes perfect sense. Well, with that being said, do you have any closing thoughts before I wrap up the show here today?
Yes, if you want. I didn't really talk about the court cases. We talked about it in one of our China videos. I highly recommend you go, and we went over a lot of the legal research in Chinese law,
That will
the
be linked
precedent that's
again
set.
in the description below. So,
Yep. And other than that, that was pretty fun. I enjoyed that. We answered, I think, all the questions in the comment section for the most part, the big ones.
yes. Yes.
Okay.
Which, if you guys have more questions, feel free to ask us more questions. We would be happy to engage and answer with them. But
And
with
you know
that being
what,
said,
Austin,
yes.
here,
Yes.
right here on the video, we should do one day a week where we answer in a video format the questions. It should be on top of the normal videos we do, just like a question Q&A video.
I actually think that's a fantastic idea.
Q&A video. In
fantastic
fact,
idea.
one
And
day when
also,
we can do a live
we
stream
can-
and do a Q&A.
yeah, and we can also do it in sort of a way by which we look at like all the videos over the past week and we find the ones that are like the very interesting, very profound to us, and then we can answer those in the videos as well.
Yeah.
Just sort of do like a recap of like the week, you know.
We'll still answer
But-
them in the comment section, but we'll do a video
yeah.
format because sometimes the questions can be very good, and then
Yeah.
that other people may have as a question. So that would be good to spread that nugget of knowledge, because questions can have a lot of knowledge in them as well.
Well, with that being said, guys, we hope that you've enjoyed what you've seen here today. I know that I have enjoyed making this video. I'm sure Fabio has enjoyed making this video as well, responding to some of the audience questions out there. And with that being said, please be sure to share the video. It really, really helps out the channel. And also please be sure to like, comment, and subscribe, and visit our website at capitalmindset.org. We are your hosts, Austin and Fabio, and we'll see you guys next time. Take care.